checking it out.
4.0 is live. 4.0 is live, dude. Um, and I really appreciate everybody throwing their experiences in on the Discord. That is helping us tremendously come up with any bug fixes. And I just really appreciate everybody taking the time to do that, right? Like you don't have to do this. You are awesome. You are outliers, and we really appreciate everything that you do. We're making Outlier better because of you. Because of you. So it's no pants Thursday around here. That's right. That's the plan. His monkey hammered hat is in the mail. He can't wait. Kostya, I'm so excited. All right, dude. So Joe got that cool outlier hat. Joe, when did that hat come in?
I think maybe 2 weeks ago or so.
Oh, you ordered it early.
Well, it's the one April had sent me from the previous, I think.
Oh, from the previous vendor, which was like
Yeah.
6 months before that.
I think so. It took quite a while, yeah.
Here, we'll put on matching hats, and everybody else can go grab an outlier flag hat over at our merch shop. That'll
There
be
we go.
fun. Um,
We've
there
gotta
you go.
get those cool shirts like what you're sporting there, the
Yeah,
monkey shirt.
hang on, hang on. I can make the monkey dance. I can make the monkey dance. Look at the monkey dance.
Hey, you put in the work, man. Do it.
Dude, yeah. My wife gets so embarrassed when I do that because like we'll be out with friends and she'll be like, "Hey Chris, do this or that." And I'll be like, "Oh, you mean this?" And she's talking about something completely different. And she's like, "No, nobody wants to see that." And I'm like, "I want to see it."
Nice.
I want to see it. Senior
Start
Wahoo, good to see you. Oh no, I want that shirt to pound, sit in cash, and don't F up in the back. Yes. Oh, he typed the whole thing. Okay, I was reading it. I'm like, wait, what is he trying to say? He's trying to say sit in cash and don't F up. I get it. I get it. Things just got really weird. Don't forget, none of us are wearing pants. That's how we go around here. That's how we go around here. We got monkey dancing with no pants on. I love it. I love it, Joe. Keeping it weird. This is invitation only, so it's fine.
That's right. We're all here. We're all friends. We're all outliers. Let's go.
All right, Joe. Let me talk about the latest revelations today. Let me grab a screenshot. So I'm keeping a list. That way I don't forget anything. And you better believe I'm gonna check it twice. Um, Screen share over here. Here we go. Architect Ray Ray loves 4.0. I love it as well. Glad to hear that. Thanks, dude. Hey, if you or anyone else runs into any bugs, do me a favor. There is a section here, Outlier V4 feedback. If you come up with anything, please let us know over there. That's the best way to let us know any bugs that popped in. So I really appreciate you. Okay, so first, position sizing is going to be based on the distance to the 10 EMA. Now, that actually is different than what we talked about yesterday. The 10 EMA is going to be our trailing stop, not the 2 ATR. And reason being is we ran the data. I don't know how fast I can go back and find that data. In fact, hold tight. Scott may, I don't remember if we put it in here. I know what I'm looking for. I'll know it when I see it. Hold tight. Hang on, I'll just go away. Conversation with Scott, that'll be faster. Okay. This is super hot and fresh, by the way.
Guest trader is correct. There are no pants in the merch store.
No, who needs pants? Let's do new slide. Delete all that. Okay. And we'll put this here. All right. So this is the latest on exit signal testing. So let me move this up slightly. Here we go. So two different scenarios running 145 plus 137. What is 145 and what is 137? Don't worry, I got you. I forget who put it in the Discord, but this made life easier. Thank you very much. 145 137. Now, I want to try and make acronyms or something so we can remember what these are. So 1 3 no, 145 is the big trend, right? D for T, B for big, and T for trend, right? The big trend. Easy. We can remember that, right? Now, how about Batman's favorite trade for 137? I like that. I feel like that comes off really easy, right? So the big trend, the power play, or Batman's favorite trade. Either one. I feel like that works. I feel like that.
Yeah, that works well.
Yeah, that way we can remember when we're looking At this, okay, the big trend, the big trend, easy, right? Batman's favorite trade, Batman's favorite trade. I feel like that's what we're trying to figure it out.
Yeah.
Now James Michael has a great point, but what if it's too far extended from the 10 EMA? This is one of the things I wanted to talk about. And we're position sizing based on distance to 10 EMA. I am 100% sure there's an indicator to calculate this. I don't have it yet, but let's just do the math here, right? Let's say if we entered on this candle, there is no rhyme or reason to this. I'm picking one at random. That would be $3.6 away from the 10 EMA. But if we entered on this candle, that would be 13 cents away from the 10 EMA. So, same stock, we could have incredibly, hugely different position sizes because if it closes under here, our risk to the stop is teensy weensy. If it closes under here, our risk to the stop is way more bigger, right? Because of this, we want a position size based on risk to the stop. Now, the half ATR was a great place to start, but mathematically speaking, it is not the best way to trade. It isn't. I don't even know if it's on here. Is it on here? No, it was so bad we dropped it. Like that's how bad it was. Now we're going with the 10 EMA trailing stop, and you're probably asking yourself, well, why the 10 EMA trailing stop? First, look at the average win is actually the highest amongst everything. Amongst every single thing, the average win is the highest on the 10 EMA. Now, don't look at donkey channels right now. We're gonna count that separately. Look at the average loss. This is second lowest with only this one. With only that one, which is everything above, being lower. And I'm like, okay, all right, cool. So bigger wins, smaller losses. Win rate's a little bit less. I'll give you that. But it's right in the ballpark as everything else. The expectancy is it's not the best, but it's also not the worst. So we're trying to make a trade-off here, and this is where Mark popped in. Mark is unfortunately having some family time that he wasn't planning on, and because of that, Mark popped in. And he's like, "Listen, you can go for outright expectancy, but we need to make sure that we keep our risk in check because big losers happen. They will always happen, no matter what, and we don't want to give them that much room to work against us." So I love this idea. Justin also loves this idea. The 10 EMA is a fantastic stop, especially if you're entering on a moving average, blazing trails, baby. Yeah. And so one thing that I was doing earlier was I was looking at lots of different trade setups here based on the data. And I sent this over to Scott and I was like, look, Scott, this follows the same thing that I've been saying forever and ever and ever. A close under the 10 EMA, like right here, like right here, like right here. That means the trend is changing. That means the momentum's not there anymore. And then you look at this one right here. Joe, when did it close under the 10 EMA? After it made a huge move.
Yep.
Right?
Red light. Yep.
Red light, green light. So this makes total sense. And it's really cool to see the data come back and reflect the same thing that we've been talking about for ages and ages, right? So that's this one here. That's where we're going to go with our trailing stop, and that's also where we're going to go with position sizing. 10 EMA on daily candle only. Yes. We can follow the 10 EMA as a trailing stop. Yes. Next, Scott just ran donkey channels. Where is a optimum donkey channel exit? And -3 seem to be optimal. You can wait till -4, but might as well get out at -3. You're not going to make much difference. So what I asked him to do was run 10 EMA plus -3 donkey channel plus one other thing combined. Hold on, what did I ask him to run? Hold tight. I don't know where it is right now, but there was something else. Maybe it was earnings. I don't remember. Oh, duh, the outlier sell signal. Outlier sell signal, 10 EMA, trailing stop, or donkey channel exits. That was the 3 that we're going to run that's running right now. And most likely it may not be the best expectancy, but I do expect it to be, if not the highest, close to the highest average win, if not the lowest, close to the least average loss. So that's my plan. That's my plan.
That
Now,
sounds promising. Nice.
yeah.
Now, do you already have your formula worked out to determine the position size based on 10 EMA?
I do. In fact, I sent this to Deep Thought. I asked him if he wouldn't mind coming up with a Google sheet for us, because he can do some great stuff in Google Sheets. So current formula right now would be, in fact, let's use this stock. Let's just pick one at random. Literally at random. I have nothing to do with this. Yeah, let's use the entry right here. Let's use this. Okay. So ATR at this point was 1.55. ATR 1.55. And then the distance to the 10 EMA in this case is super, super close. Like, I don't know if TradingView is even going to let me do it. It wants to snap to things. I don't want it to snap. I want it to just go. It's not even going to do it for me. Hang on. I'm going to have to calculate this. So the close here was 80.58. The 10 EMA is at 81.11. So 53 cents. So in this case, you would trade a much bigger position size. Oh my good gravy. A much bigger position size, because the risk to your stop is 53 cents versus your ATR being 1.55. That can't be right. That can't be right, because half of an ATR would get you 76 cents, give or take. Maybe I built my formula wrong. No. That's the right formula. Two times. No. That nearly matches up exactly with my formula over here. So I know I did it right. Maybe I got the distance to the 10 EMA wrong.
Folks in the chat are saying that there's a magnet icon on the TradingView
Oh, is there?
page. Yeah.
Where that is?
Yeah, where is it? Click the magnet icon in TradingView to stop the snap feature.
Where's the magnet?
Left side.
in black. Oh, look at that.
All right.
Chris learned something today. Oh, yeah, that's way more better. Thank you, Steven. Rockstar, my friend. Okay, cool. So 23 cents, give or take. 18 cents, it's more like it. But anyway.
All right.
Yeah, did I do that right? 16 cents. Clearly, Chris is like the worst at math today. That would be like a million contracts. I don't know. I feel like my formula is off somewhere here. Point being, we're gonna get it in. Don't stress on that. This just doesn't seem right, Joe. Hang on. I'm saying maybe it is right, because that's gonna give me the same number. And this number is ballpark. What we talk about here is our example. Right? If we do 1.5, that still gives us the same number here. So my formulas are good. So this is the deal, right? You're going to be able to trade way more bigger, hugely more bigger, if you have a very tight stop. So if like a quarter, you trade 125 contracts. I know this sounds crazy, and you're probably like, no, I'm not going to do that. But legitimately, if your stop is right here, then you can trade huge. If your stop is far away, then you want to trade really small. It's just the way the math works out. So that may change. But in any case, that's where things are standing right now. All right, let's get back to it. So what are the other updates so far? Hold tight. Okay. We have gotten to the point where we are over 5 times higher expectancy than the golden ticket trading strategy.
Wow, Chris, 5 times?
Yeah. Trust me.
Good night.
When Scott gave me the numbers and the golden ticket had 20 basis points of expectancy, first I was like, is that it? Second off, I was like, last year I did 97 or 94, 90 something percent return on 20 basis points. Nothing changed from A to B. If I made 97% returns last year and my expectancy was 20 basis points and we just 5x that, I cannot say we're going to get 500% returns this year. But what I can say is we are lighting something up. Like we're going to light it up like a Christmas tree.
I mean, even if you're off by half, it's still 2.5 times. Wow.
Hey, look who's back from the dead, Scott Schwartz. Let me fix that real quick. Hold on, Scott. He made it back, Scott. I'm so glad. Awesome. Very cool. Another thing that Scott found, well, Scott ran the data. I accidentally found this. This was unintentional. I said, Scott, you're not going to believe this. He's like, what? And I was like, well, look at this. Look at this. And Scott was so excited. He shared it in the Discord. Hold on.
Nice. That's exciting.
Dude, it's so exciting. Wait for it. Oh, I really should have started at the top here. There's that. Yeah. It's just like Top Gun. Joe is the wingman. Talk to me, Goose. Stop loss is narrowing. Quick, eject. Hold on. What Scott put out here was really cool. Oh, check this out. Oh, check this out. So, if we're talking expectancies here, the 10 EMA is used to help you avoid big losses. It is there on purpose. So the expectancy on your losses, 1.12. The expectancy with sell signals, which is not always going to be a win or loss, was 7.09. And then if you hit earnings, like run up into earnings, sell before earnings, 4.35. These numbers are absolutely astronomically higher than we thought they were.
Wow.
I know.
They're so high, you must have been like, is my math right? Because this is amazing.
Mm-hmm.
Wow.
So
now when you're talking 10 EMA stop, you're not saying you're going to put in a stop. You're saying at the end of the day, you're going to trade your stop as if it was manual, basically. Okay.
Right. Exactly. Now we may go back to have ATR position sizing if position sizes go like bonkers huge. Like I don't want to trade bonkers huge if it doesn't make sense to do so. But also if we then, I mean, you're mixing variables here. You're mixing variables here. I don't like that. I want to be consistent at least, right? And so that's the whole point of the 2 ATR. You're dividing by two ATRs. That way you're consistent with the ATR risk you're taking. So yeah, we're gonna get there. Don't stress. We have so much that we're working on. We've pretty much nailed down entry signals. We're still working on exit signals. One thing is we're never going to trade healthcare again, Joe. Never going to happen.
I've already removed it.
Screw that guy.
Yeah. And Kate does.
We still want to have the constraint of 70 on the SPY heat map and 70 on the sector heat map, which right now would keep you in cash. In fact, what does 4.0 say? When did it go to 70? By the way, how cool is this? I love being able to just glance up there and see OVTLYR 9. Oh man, is that cool?
Yeah.
Okay, so we're still on buy signal, but we hit 70 all the way back in July 11th. So we've been over 70 since July 11th, right? Guess whose portfolio was hurting like gangbusters since July 11th? This guy, that guy, right? That's real, right? We got to a point where the market's been overbought, and so the trading opportunities have really dwindled. But that's okay, right?
That one's easy to see. Just like you said, we all experienced, this being over 70 directly correlated to the losses. So that one's obvious to me.
Now, this was a point of contention yesterday, and I appreciate you in the Discord, right? You threw some great stuff out there. Using the relative greed score, meaning if the sector relative greed, the sector greed is higher than the spy's greed, you should have a score of greater than 1, right? If you divide sector divided by spies, fear and greed, and it's greater than 1, then that means the relative greed is really high in that sector. And my issue with that, I had lost sleep over this last night, Joe. It was like running in the back of my mind because you ran a great Monte Carlo on that. And it really turned out that the what we call outcome, which is frequency times expectancy, which was higher without relative fear and greed. So let's say it was 10,000 more trades, would end up having a greater overall outcome. However, we're not taking 10,000 trades, Joe. We're certainly taking 1,000 trades, Joe. So when I woke up this morning, I'm like, there's no way on God's green earth that I am going to be taking 500 trades, let alone 100 trades in a year, right? My 91% return last year, or whatever it was, I think it was 91.37, was on 48 trades, right? You don't need buttloads of trades. So I was like, we don't need the lower expectancy just to get the higher frequency, because we're never going to hit that expectancy anyway. The outcome is almost irrelevant, because if we're just focusing in on 100 trades, I'm going to take 100 trades either way. I'm going to go with the higher expectancy, because we could still hit the expectancy, but we're never going to hit the outcome because we don't have the frequency.
Yeah.
This is why it's great to be an outlier, because we talk deep old math in the invitation only live streams.
Yeah.
And, if you're not into math, it's going to this is going to be way over your head. But I'm here for you. Right? I love this too.
What I appreciated about that conversation last night was some of those variables in that Monte Carlo simulator don't really have an explanation as to really what they're for, right? And so then instead of maxing out simulations and maxing out trades, we progressively got to the point where we kind of realized, hey, have this reflect the number of trades you're actually going to take, and have it reflect as close to a real position size as possible. And then the outcome is most closely related to what you would expect to see. So,
Right.
Exactly. It was a good conversation. Just like you said, it's great to be in this group because we have those kind of in-depth discussions of why you would do one thing versus another.
Exactly. And our goal, everybody's goal here, is to make Master of the Universe money. Nobody who is an outlier should be trying to make less than Master of the Universe money. Okay. Couple other entry notes. The price has to be greater than the 10 EMA at entry. Joe, why does it need to be greater than the 10 EMA at entry?
Well, because if it's under the 10 EMA, that means the trend is going the wrong direction.
Yeah, exactly. But not only that, it's already under your exit signal. How in the wide world of sports are you going to buy a stock that's already under your exit signal? Yeah. And then the price needs to be above the prior day low. Now, we're not using that as an exit signal, just as an entry filter. This actually did prove to give higher expectancy. So we're going to leave that there.
So your price below the higher day low. Can you say it again? You're not using that
price
as
above the prior day's low.
Okay.
Price above. Let's look at an example.
Yeah.
So let's see. Maybe not the best example. Let's find a different one. The price needs to be above the 10 EMA and above the prior day's low. So for example, let's say you could enter on this candle here. It's above the 10 EMA, although that's under the 20. You could enter on this candle here because it's above the 10 EMA and above the prior day's low. But you wouldn't want to enter on candle like, looking for a below the prior day low here. See how that's below the prior day's low? You don't want that. You don't want that.
Yep, exactly.
And that's just an entry filter. It's not an exit signal. Okay. AS1 and AS2 donkey channel conditions. Let's go over what those are. By the way, in the chat, do me a favor. Is this helpful? Do you like seeing the changes we're making on a daily basis? I mean, I like talking about it because this is my trading plan, right? And a trading plan is not made in a 1 hour sit down, right? This is taking us weeks to get through. This is taking us ungodly amounts of computational hour between multiple people. Like, do you guys like it? Okay, cool. You guys do like it. Awesome. I'm glad to hear that. Okay. So AS1 and AS2. AS1, active scenario 1. AS2, active scenario 2. Now, this is really cool, Joe. Have you seen the donkey channels in OVTLYR just yet?
Oh yeah, what a change! Beautiful.
Let's go. And then right above Joe's head, Joe, do me a favor. Take your left hand and point straight up. Right there, slightly there. So stop. Right there is the calculation. It'll tell you what the donkey channel score is, so you don't have to think about it. That's
right wonderful
there. Yeah, Mahesh was really proud of that one. He was like, "Hey, did you see the donkey channel score?" And I was like, "Hell yeah, I did. That's so cool, bro. So cool.
Great job."
So it'll light up red or green if it triggers a donkey channel change, or it'll be gray if not. So that makes it easy as well. But you can see right here, right above Joe's left ear, is donkey channel number 2. OC for OVTLYR channel. It will always be known on our live streams as donkey channels. But yeah, OC equals OVTLYR channel equals got it from Nate. Exactly. Justin says, I didn't even notice that. Yeah, isn't that cool? Yeah. It'll tell you right there. So now we can see AS1 on the market. I wonder what that is. Let's go look at the market. Let's go look at market breadth. And we can see over here, it even tells you the score right there. How cool is that? Now,
beautiful.
I personally like to trade for the market. I like full stocks. So all 2,600 stocks. You could do the SPY, you could do the Dow, you could do whatever you want. I like full stocks. So this one today would give us an OVTLYR channel score of 1. And if we zoom in, look at that. We got an OVTLYR channel score of 1. Too easy.
Too easy.
I love easy. And then that would not put us in an AS1 condition. So we can axe that. An AS2 condition. You know what? I might change the naming of these, right? AS1 equals market 2. But AS2 equals market 1. I might change those. I'm just saying I might change those. But for now, AS2 is market greater than or equal to 1. That's what we got today, Joe.
Beautiful.
Sector greater than or equal to 1. So if the market's greater than or equal to 1, and then you got a sector that's greater than or equal to 1, how about the tech sector? That's got 2. Or the industrial, that's got 1. Or the energies, that's got 1. Or the real estates, that's got 1. How cool is that? And they're all crossed over on their 10 EMA. So that makes life simple. Man, I'm loving this. It is so easy. Chris is easy, but he ain't cheap. That's right.
I also appreciate that you can find the same information inside the scanner as well.
You can? Teach me this. I didn't know that.
Screener. Yep.
Show me.
There is a column, OC status.
Oh, look at that. That's new.
Yeah.
Hold tight. OC. So, oh yeah, there's green ones and red ones. Oh man, it's like Christmas.
Yeah, that made my scanning so quick this morning. I could just pick out the green ones.
Dude, that was great. But there will be a filter at some point where it's built in, so that'll be coming at some point. But I know, we have to go in itty bitty baby steps. And OVTLYR 4.0, it's a big old baby step for sure. Okay. AS1 and AS2, we talked about that. No breadth nuances, just the 10 EMA crossover in any sector. Let's talk about the breadth nuances that I'm mentioning, right? One thing that I had found is if it reached over 75. Whoa, 4.0 is really different. Look at that. Never did it hit 75. Hold tight. Yo. Okay, maybe once in 2020. Whoa, that's different. What about in the sectors? Let's go to financials. Oh, this is a good question. Active or swing signals. That does make a difference. I have no idea. This is active signals. There you go. Okay, in the sector, it looks like it does get over 75. All right. But what I had observed was if it got over 75 and then pulled back, that would be a time to not add any more trades. However, if I'm not mistaken, maybe not. I can't remember. I thought we had tested, and maybe I didn't write it down, that we wanted to see breadth rising. I need to confirm with Scott. I need to confirm. I don't know if Scott's watching this live or not. But if breadth was rising, that was something we wanted, versus if breadth is falling on that date. So that's something I need to confirm with Scott. Let me type that out real quick before I forget.
So not necessarily the level it got to, but just the fact that you have more stocks being listed as sell in that sector.
Right.
I do not personally hear a mic hum, but I have seen a couple of people mention it periodically.
I don't hear it either.
Let me try muting, see if it's me.
I am not muted.
All right, we're confirmed it's not me. We received a buzz while I was muted.
No, it can't be me. No, they're saying it was you.
Oh no!
I don't hear it though.
I'm gonna get blocked.
I'm gonna ban you right out the studio.
All right, I'll mute unless I have something interesting to say.
Okay, I don't know. Sorry, dude. I don't hear it. Stock heat map, constituent heat map, and SPY heat map all need to be rising. So the heat map is right here. The SPY's heat map needs to be rising, which is not currently. It's actually falling. The individual stock, let's go to A stock. Oh, letter A for A stock. How do you like that? That was a little dad joke right here. Mike says ban Joe. I like that idea. It's definitely you, Joe. You ruined everything. Okay, so the SPY's heat map needs to be rising. So does the stocks heat map need to be rising. And the sectors heat map needs to be rising. But in this case, Joe, it would not be. It would not be. All right. We can take you can take a trade that comes through with a today signal or a yesterday signal, as long as everything lines up today still. So for example, if the green overlay 10/20 price over 50 wasn't ready yesterday, but it is ready today, and the buy signal came yesterday, you could take that as a second chance signal. You could take that as a second chance signal. Phil wants to buy you some nice mice. I know you meant Mike.
My cat will love it.
Oh, A's in the healthcare though. Oh man. Is it? I don't even know what A is. I just picked one at random. Son of a bitch. It's in the healthcare. All right, screw that guy.
Yeah. I see a couple of people offering suggestions for improvement. Maybe point out where Mahesh wants the improvement commentary placed.
You mean over here?
Yeah. Yep.
Yeah. So if you guys have any suggestions, please drop it over here. Elsewise, it's going to get lost here on the YouTube live stream for sure. Joe is washing his clothes at OVTLYR HQ. That's what the sound is. This is a washing machine in the background over there. Yes, we offer free laundromat for employees and non-employees, volunteers. Joe's a volunteer. Joe's getting paid nothing to be here. Can you guys believe Joe is sacrificing his time to be here?
I got this great hat.
Dude, what a cool guy. I appreciate you, Joe. All right. No overhead order blocks within 2%. We confirmed that with the data. I had to yesterday eat my snob filter, which I'm not happy about. I've been a snob my whole life, Joe. Ever since I popped out the womb. And now I have to not be a snob and buy cheap ass stocks. I don't want to buy cheap ass stocks, but we proved yesterday that they actually have better signals than the more expensive stocks. So I guess I'll be buying cheap ass stocks.
Yeah, I guess so. Didn't Buffett say he wouldn't reduce, or he wouldn't split because he wanted select people buying into his stocks? So,
There you go.
the flip of that is cheap stocks everybody can get into, right?
That's a very good point. Deep Thought actually mentioned that somewhere on the Discord. I remember picking that up. He was like, dude, that gives me so many more opportunities. And truly it does. It really and truly honestly does. And so that's actually great for everybody. Chris is gonna make money on it either way, so I'm not really worried about it. 10 EMA stop or the outlier cell signal or the donkey channel. Scott's running that right now. No heat map stall exits. That one surprised me. That one super surprised me. Let's go to A, who I will never trade again. But when the heat map starts to go down, one thing Scott actually picked up is he's like, look, that cell signal comes really quick once the heat map starts to go down. And he's like, there's no benefit in trying to front run the signal if it comes like the day or the day after when the heat map starts to contract. And that was on the market, that was on the stock, and that was on the sector. Exiting before earnings, we showed that earlier, actually was like a huge win. Like, and I've told you, this is one of my all-time #1 favorite trades. You guys have heard me talk about this. The run up into earnings is so easy. That is such easy money. And let's look at a couple examples. Nvidia comes to mind.
I've actually never traded the run up, so I'm pretty interested to see this.
Like, look at this, right? From bottom to top right here. Let me remove all drawings. From bottom to top right here. Like 5%, $10 on Nvidia, right? Running up into earnings. Let's look at you can pick any stock, right? Let's go to Amazon. Let's go to Amazon. Earnings. The run up into earnings. Look at the run up into earnings. It is easy money, dude, because people are so stoked, so excited. It's buy the rumor, sell the news.
Mm-hmm.
And as we showed in the data earlier, I don't know how quickly I could get back to it. Oh, that quickly. Just selling at earnings gives you huge returns. That's it. Just selling at earnings is huge returns.
Yeah.
It's
So
cool,
I
right?
was thinking to myself, I suspect you don't do that because implied volatility rolls up before earnings, and then Stefan actually said the same exact thing.
But you
The
do.
reason that's why you do it is because IV pumps.
Now you're getting a delta gain on this, so your delta is increasing. You're getting also the Vega gain as your implied volatility is increasing. So you're getting your intrinsic and your extrinsic value both exploding higher, and that's not even baked into these numbers right here. That's just pure delta move on the stock, right? None of these numbers have leverage applied to them, which is really cool. So that's exciting. Trading and exiting at earnings. And then we talked about position sizing earlier, which I don't know, dude. I may go back to that half ATR because, dude, like legitimately, I'm not going to put on 1,000 contracts because it's 10 cents away from the 10 EMA. I don't know. That bothers me. We may need to find something better for that.
Well, I know you have Deep Thought looking into it as well, so
Yeah.
he might come up with a little tweak.
And maybe it's either or, right? Whichever one has less risk. That would make a ton of sense. That's actually how I built this formula right here. Right here, the minimum risk, which clearly is not calculating correctly. But that was kind of my plan when I was working on this is, okay, if whichever one of these has the least amount of risk, and risk is the contracts, not risk per dollar amount. Maybe. And just swap this over. Yeah, there you go. That was easy. And maybe that's the way we go, right? Whichever one has the least amount of contracts. Now, there's some people going to be like, well, what's wrong with you? Why would you want the least amount of contracts? Because the delta is going to move no matter what. The delta would be reflected in your contracts no matter what. But if you minimize the risk, the dollar risk, it'll make a huge difference, right? The $12.50 risk versus 125, right? Because at the end of the day, both of these, if you hit your stop, is $12.50. But to hit the stop with 125 contracts versus 20 contracts is way different. And these have different stops, right? So either way.
You may have concern of being able to get out of them too without a huge spread.
Dude, yeah, for sure. Like, for example, this shows the half ATR. If the current price is $10 and the half ATR is this, so this minus this divided by 2. get you 925. So you would exit here at 925. Okay. But here you would exit at equals, yeah, just roll this down. There, 987. So a big difference in where you get out, right? And you're not putting a stop in at the market, but you know, this is a huge difference here when you're talking 6 times more contracts. Huge difference. So I think that's what I'm going to do, is go with whichever is the least amount of risk between these 2 points. That makes sense to me. That does involve a bit more calculation, and that's fine, right? Dude, I wouldn't worry about fees. Wouldn't worry about fees. Because we should be making so much money you wouldn't even know about what a fee is. Okay, let's you guys asked a lot of questions. Joe saved some questions for me. I appreciate you doing that, Joe. Papalopagus wants to look at PSTG. Let's look at PSTG together. Are you guys having fun? Type in number 1 in the chat if that was useful. Type in number 2 in the chat if this was a huge waste of time. I can't believe this random guy on the internet who invited me to come here live and hang out with him today wasted all my time. So you got an outlier 9 right there on PTSG. Now, Joe, I really want to point this out as well. When it's 137 or 145, that doesn't mean it only is those things. It's those things at a minimum, right? It can have everything else. It can have anything else. But as long as it has 145 or 137, that's when we're talking about Master of the Universe money. Okay. So this looks brilliant here. You got all 9 lit up here. You got that buy signal coming through. The sectors get more fear and greed. The only issue that we've discovered, and it's not in my trading plan officially just yet, is that cap on 70 on the SPY. I mean, I'm not going to be taking any trades at all until we have a pullback on the greed on the SPY. So elsewise, it looks brilliant, dude. How cool is it, Joe, that I can look within a moment's notice and I can say, wow, that looks great. Boom. I don't have to go through my PowerPoints and such.
I do think that's so fast. I think it could be even faster if we put the 1s, the 3s, and the 7s all, together on the left-hand side of the visual, though.
Yeah.
Little
Well,
tweak.
this is so new, right? And
yeah.
like Mahesh is only going to give us so much room because he doesn't want this to be the Chris show. He wants us to make sure that we understand how to trade with outlier, right? It's not Chrysler, it's outlier, right? I'm just showing you how to trade with it. David says, if the 10 EMA is super far away, do we not enter or we just take super small risk? In this case, I think we go back to figuring out which of the two is the least amount of risk and go with that. And it's a very valid point, David. It's extremely valid point, because let's say if it is, if this is a $10 stock and it's $5 away to the 10 EMA, right? It's half an ATR, or distance to the 10 EMA. Oh, maybe I did mess up that formula. Oh, no, there. It is $5 to the distance. Right. That was half an ATR. Yeah, if it's $5 away, you're only going to trade 6 contracts in this case versus trading 20. And realistically speaking, Joe, you're going to get out long before the stock goes down 50%. Long before. So, great point, David. Sean lost all of his shorts and his pants. Sean's walking around bottomless. Justin, what will the formula look like when we make position sizing to EMA? Can we make a new spreadsheet? Yes. Sorry, I didn't see that question earlier. Deep Thought's going to help me out and come up with a really beautiful spreadsheet for us. David says, I stayed up late last week in backtesting. I said to myself, I wonder why we don't use the 10 EMA as a stop, because the big winners almost never hit it. Yeah, dude. I've been saying that for ages. But I wanted to keep my risk really tight. You're 100% right on the money. So I agree with you in every way, shape, and form, David. Niles says, is there any rules for how far away the 10 EMA needs to be from the current price? Surely it can't be 1 cent away. Well, in that case, I feel like it really would need to be basing on the half ATR, because you're right. If the current price is 10 and it's 1 cent away, we could have 3,000 contracts. Or how many shares? Only 250,000 shares, Joe. I have yet to buy a 250,000 lot, but I could.
You wait till next year, man. You'll be doing it all the time.
I like it. It doesn't sound crazy. It sounds really smart if it runs OMG. Zachary, what are you doing to hold to the end of the day? Are you going to hold? Yes, always, 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 always. That's my opinion. Now, granted, all of these points are so so beautiful that I'm definitely going to go with this setup here. Look at that. We're making changes, right? We're going to write them in stone at some point in the future. But this is also something, right? A trading plan is not made in an afternoon. Right? This is just one aspect of it. And how long have we spent talking about just this one part? Right. Let's see. Johnny, can we add a filter for the date if the signal on the screener, date of the signal on the screener, so we can only say today's date, make sorting the columns easier? I think it's already got that. It may not be a filter, but it does show like the default sorting is by today's date. I don't know if that helps you though. We might get there. We might get there. Do me a favor, throw that into the requests. Mahesh is going to be looking at the requests and making where's that at? Right here. Mahesh is going to be in the Discord looking at all of that stuff there. What's the new low price minimum? I don't know. Truly, I don't know. Dude, the cheaper it got, the better the expectancy got, and it blew my mind. Only data pays. Hell yeah. I love that. Sure, IV on options are rising before earnings, right? Mentor plus software equals the best traders. That's what we're talking about here. That's what we're trying to do with OVTLYR, right? If I can make masters of the universe money, you can make masters of the universe money, right? That's the plan. Are we thinking to exit the day before earnings? Well, really, it really comes down to what time earnings are, right? If earnings are after the market close, you could hold it up to that date. If earnings are the following morning before the market opens, then you'd want to close the day before, for sure. Nathan says, this is all about reducing risk. Reducing risk should be paramount above everything else. I totally agree with you, Nate. Totally agree with you. Joe, we haven't even made like a real video yet. We've just been hanging out, shooting the breeze, talking about all this cool stuff in OVTLYR 4.0. Maybe this is the video.
This could be
It's
the
not
video.
going to get any views. It's going to get 4 views. A YouTube income is going to be 18 cents tomorrow. But you know what, Joe? I think that's what it's going to be.
It's been a blast, though. I've really enjoyed it.
I've enjoyed the fact that you have ruined everybody's earbuds and microphone or speakers with your awful microphone. This is all your fault, Joe. Everybody in the chat say, "Go home, Joe. You smell bad and you sound bad as well." Go home, Joe. You smell bad and sound bad as well. Everybody, make sure you hurt Joe's feelings, okay?
Man, all this pressure.
Oh, I love you, Joe. You're so much fun to hang out with. Oh, look at that. Everybody actually says it the wrong way. We love you, Joe. We want more Joe. It says, I'm suing Joe. Poor Joe. Don't go put some pants on, Joe. I like that one. There you go. Okay, Joe. They won me over, dude.
I'm ecstatic that today, one of the stocks I picked last, I don't know, 2 days ago, got rolled. I love rolling stocks. It's
making money, bro. What stock is it?
MGNI.
Dude, let's go. Making money, right? Did you buy this bundle here?
Let's see.
Let's look at the 4.0 on this.
I bought this on Monday the 25th.
Back handle. There you go. Which makes sense. This is a breakout over that order block right there. Yep. MGNI. Dude, it's got all 9. It's got that buy signal on Monday, August 25th. How about that?
I know a few of us are in it because we looked at it at the end of what do we call it? The behind the scenes. We looked at it together.
Don't talk about that. Don't talk about that. All right, Joe, listen, this has been a lot of fun today. I've enjoyed backtesting with you, showing the updates for everybody. And of course, we made the world's most boring YouTube video that will get 0 clicks. But you know what? That's okay. It's yes, make sure you hit the dislike button. That's okay. Our objective here is to make Master of the Universe money, not make the best YouTube videos possible. But in the meantime, I love hanging out with you guys on these private invitation-only live streams, the most boring live streams on the planet from a random guy and another 2 random guys.
Sidekick.
Dude, Joe, I mean, now that OVTLYR 4.0 is out, and if somebody wanted to save time, make money, and start winning with less risk, what should they do?
Click on one of these videos.
Oh, that's a great idea. That's a fantastic idea. We'll talk soon.